Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's on January 4th, and we got some news here today because we had some excitement in the markets yesterday, so we'll cover that in a second here. First, for economic news release scheduled for today is the non-farm payrolls. What we've been kind of waiting for this week is for December, and we had 161,000 jobs created the previous month in November. The forecast was about to be remain about the same. It came at 155. So remember, the ADP yesterday came out at 215, which the markets like that. Obviously, it created more jobs. They kind of raised it a little bit, so they were estimating about 150 yesterday, and they kind of raised it about 160, and it came in just under that. So a little disappointing in that regards because they thought probably would be a little bit more jobs created. Unemployment rate basically was at 7.8. They think it would come down a little bit and remained the same at 7.8. So there was no change with the unemployment rate. And then we had the ISM non-manufacturing or ISM services. So this is the index for the service industry for the month of December. So we had a 54.7 rating. So anything above 50 is expansion. Anything below that is contraction. And they thought it would be kind of a plateau, a flat line basically for December, so it would be the same. And it came in a little higher. So we had a little bit better numbers for the month of December for the services industry at 50 with a 56.1%. And then last but not least, we have factors for the month of November. So back in October, we had a 0.8% increase. They had forecasts about 0.3%, and basically it was nil, nothing. Nothing happened in November for factors. So now we'll jump over to headline news here. Stock market's up today, but yesterday did, as we talked in the morning, it was kind of mixed, and then they both it just kind of tanked a bit in the afternoon after the Fed meetings minutes were released later in the afternoon here on the West Coast. So what transpired that created all this? We basically, it's this statement here and there. Basically, the statement states that several thought that it would probably be appropriate to slow or to stop the purchases well before the end of 2013, citing concerns about financial stability or the size of the balance sheet. What they're referencing is the purchases of the QE3 we've been dealing with, the purchase of mortgage-backed securities and treasuries. And so what's the big concern is that it's not just one or two people, it's several. And a lot of these people or these investors were kind of pegging that the QE would kind of last until maybe 2014-15 because when we talked about rates every time they did their meetings, when they were talking about raising rates, they kept changing the date later and later because the economy wasn't showing any strength. Being that maybe 2014, the rates won't rise until about 2014. The last time was 2015. But this last meeting, they did change the index of what they're going to gauge, and that was based on the inflation number and the unemployment number. And to do 2013, it doesn't seem like we would hit any of those numbers to do that. So this is what created the big panic yesterday and kind of screeching out in both markets, from the bond market as well as the stock market. So we'll go ahead and jump over to the bond market, see how this was affected. So if you recall, we were up a little bit yesterday. We were up here a little bit, and then we had this huge drop here. And this is about 69 basis points a drop here. So what that means is that we had almost 3/4 of a point increase in our pricing to interest rates. So we had a huge price increase. Today we're starting off lower than where we were. We start off almost 21 basis points, as you can see, lower than what we started the day off. So we start off way down here, and now we're back to where we left off the day yesterday so far this morning. Now, if we can keep this going and hopefully get up above the 104 level, we might be able to have a little bounce and be able to increase it to about the 104.20. So as a result, obviously, the rates have climbed up yesterday a bit, and as well as today, rates have climbed up even further. So this is something really to watch out for. We're kind of uncharted territory here because we haven't had this type of announcement or this type of a surprise that came out from the Fed. They're usually, they've been trying to be very transparent, and obviously this was pretty big news that popped out and wasn't very well known to the public prior to the meetings, these minutes that were released. So be very cautious here. Short term, we got a lot of instability going to be happening here, so be very cautious right here. if you're purchasing or refinancing, do it now because we don't know uh, if rates could go up even further. And on top of it, if you're uh, but long term, it's possible we could see some improvement later on after this news kind of wears off a little bit. Because remember, also back in March, we had the fiscal cliff, the pricing or the spending cuts. There's going to be more debates going on with the spending cuts to come up on the fiscal cliff because they haven't resolved that part. Just the kick in for the income wise, the tax brackets and such, and some of the programs that are tied to it. And of course, all the pork that they added to it. So. All right, folks. Well, you guys have a wonderful weekend, and thanks for watching. And I will see you guys on Monday. Sorry for the long video here. Just kind of a lot to cover today, and we will see you guys on Monday. Have a great day.